And here is, I wanted to ask just to be sure, you're seeing my screen? Do you see the presentation?
Yes.
Okay, perfect. And you only see the slide, right? I know it's not in presentation mode, but you see my slide, right? Okay, perfect. You will be muted throughout the presentation, just to be sure, because of background noises, etc. But this is a fireside chat. This is the kind of conversation we wanted to have around this topic. So feel free to interrupt or send a chat message if you cannot speak because you're somewhere that you cannot speak. I also want to be very mindful of everyone's time zones. I see people from Spain to Burundi to Australia, so this makes me very happy as well. Feel free to interact and send your insights. Today with us we have Rita Casimiro. She's head of acceleration in Maze X, accelerator based in Lisbon, but that works with impact ventures from Europe, and I would say maybe some other cases as well. She will be able to let us know for sure. Before Maze, there was also the social investment lab, also based in Lisbon, but that tried to map all the capital needs of entrepreneurs and how they would access funds and how these funding possibilities actually was an efficient solution for their needs and their business models, etc. So, and she has plenty of experience working with startups, working with impact ventures, with the impact ecosystem. So I'm very happy to bring her to clarify all these questions we have and show us how this ecosystem can actually solve your questions, and when are you ready to access what kind of opportunities that are out there, etc. And we want you to, I have some questions and some things that I gathered along in the community and some emails. Thank you for that. But I want you to participate and be interactive. So please let us know you're here. Thank you so much for joining, Rita. Very, very welcome. I wanted maybe to start, and I'll let you introduce yourself as well. But I'm sure that everyone here today is somehow related to impact. So either working an initiative that is starting, or it's an early stage founder, or maybe is an established business and wants to expand and how to understand how to give the next steps and what is viable or not. Also, impact maybe in the last 20 years had a huge boom and is trending and it's gaining a lot of momentum. So maybe I would start a little bit with asking you what is your perspective on the different profiles of impact ventures and what you're witnessing out there?
Yes, sure. Hello, everyone. Thank you so much, Alexandra, for the invitation and for organizing this session. So as Alexandra said, let's make it as interactive as possible, because I think that's what's most interesting about these moments, right? But so, yeah, so I'll start with Alexandra's question then. So the way I see how the impact ecosystem has been developing and what it is right now. So I would say that impact is much more and more seen as an amazing economic opportunity that we're facing right now, if not the biggest. So basically, I think we are all very, like, we as consumers, we as employees, we as investors, we are very aware that the world needs to change, and the role of businesses need to, businesses need to adapt in order to provide the environment sustainability that we need to have in our planet, but also to have a more sustainable society in social terms. So all the companies that we see that have always been created, they focus on solving some kind of a problem, and right now we are finally looking at these social or environmental problems as amazing opportunities to develop businesses, and I think it's great. So the first point with all of this that I've just said is like the popularity and the momentum that definitely we see, and the increasing of the ecosystem. So I think that we are in a great momentum right now. Then in terms of what is out there, in terms of the different solutions, I would say that we should look at impact, and especially when we talk about like impact investing, as a spectrum, right? From on the one side of the spectrum, we have solutions that don't necessarily have a very strong business model, and sometimes they don't have a commercial business model at all. They focus on the impact model, which is perfectly fine. It's just a positioning, it's a strategy. It's also many times because of the specific problem that is being addressed, and the specific public target that sometimes does not have the willingness to pay. And it's hard to create a business model around that. And that's why also we have, and in Europe, we are lucky to have a lot of social support by the different governments in order to, fund some of these solutions. So on the one side of the spectrum, we have impact solutions that need impact investing from an efficiency and from an efficacy, effectiveness,
yes.
Perspective, in the sense that it's not necessarily a problem that they don't have a business model, because there are funds, there are philanthropists, there is the government, many times of several public entities that are willing to pay for these solutions. But here, when we're talking about the solutions, we need to be ambitious and try to do a better job into applying the funds. So being more ambitious and more robust into tracking the data, into understanding the cost efficiency of the solution, and most of all, focus on outcomes. Because what we see many times is that some solutions tend to focus on some of the symptoms, and they are very well intentioned, and many times this is because of the lack of data and the lack of processes. But when you understand what's actually being done, then it's kind of it does not really reach the expectations, which is the actual solving the problem at stake. So we should be more demanding, and I think that that's where instruments like social impact bonds are headed, which are an improvement on public contracts with social organizations, an improvement on philanthropy. Then we also have strategic philanthropy, which is basically philanthropists not only providing simply financial support, but also giving some non-financial support, which nowadays is extremely valid, and it's has gained all the importance, and the different funders know how important it is to provide the entrepreneurs with access to networks, with some mentoring opportunities, all of that. So this is one side of the spectrum. Then I would say in the middle of the spectrum, we have what we call, we have those solutions that have interesting, business models that generate revenues, but they are not as strong in order to ensure the financial sustainability of the solution as a business, as a scaling business. And again, that's fine. And that's why in terms of the funding perspective on impact investing, we have models such as like hybrid instruments, which are a combination of market-based instruments such as equity or debt with grants, where the equity and debt usually tend to focus on the revenue generating part of the business, and the grant tends to fund the component of the business or the solution that is not really self-sustaining. And again, this is just, again, being creative about the different instruments that we have at stake, and putting together different options that are aligned with the needs that we see in the market. So I think that it's worth exploring. And in terms of hybrid instruments, I don't think they are as maximized as they can. So there's still a lot of work to be done. And I think that entrepreneurs, obviously investors have a massive role to play in this, but I think that entrepreneurs, by educating themselves on these instruments, are also extremely important to challenge the investors. Also because it's in their best interest, of course, to create these solutions. So they should be proactive in this. So I talked about one side of the spectrum, now the middle, and then the other side of the spectrum, which is businesses, impact businesses that they have, impact completely strategic with what they do, but they also have a sounding business model that is able to ensure the scalability and the growth of the company. And here we tend to think about the traditional startup, scalable, anyways. And for these cases, we have instruments such as venture capital funds with the same ambitions as any other venture capital or funds that usually invest in, I don't know, like other areas of tech startups. But in this case, the difference from impact funds is that impact funds have in their investment thesis the filter for impact. So they really want to deploy their capital into solutions that are creating a positive good, but at the same time are providing them with the financial returns that they expect in the other sectors. So I would say that, we can look at impact right now along this spectrum. Of course, there's a lot of different variants in between, but I would say this is what we see. And again, it's the different focuses that some entities take into, investing on a VC. For example, Maze. I will now give the case of Maze to make it more concrete. We, as a company, we have an accelerator, like Sandra was telling you, Maze X. But the accelerator program is just a service that we have. We have two other pillars. So acceleration is one pillar, and then we have two others. One of them is an impact investing fund, again, a VC fund, a venture capital fund, which is on the other side of the spectrum that I was just mentioning now. And we are looking for very scalable financial interesting businesses. Sorry, now I was just losing myself. And in terms of the financial aggressiveness of the model, it's very specific. Again, because our strategy is to prove that we can have impact businesses, scalable businesses, but with this impact component. I think that nowadays we don't have a lot of examples still. So we're still in the testing phase, which is why venture capital exists. So this is one side of what we're doing. It's very specific for this stage. We also, in order to have an impact as an entity, we need to kind of prioritize. But then we also work on the other side of the spectrum with our public sector work. So we implement social impact bonds. We do some data management projects with the public sector in order, again, to help them do a better job with the social entities they work with. But for example, Maze is not acting in the middle of the spectrum as of now. But this is our case. It's a strategic approach. We don't have resources to do it all. And so we have prioritized these two sides. But again, it's just a decision, an internal decision, and it's just understanding, okay, where do we want to focus our resources? And I think from an entrepreneur point of view, it's quite important for you to understand where you lay more or less in the spectrum, and then analyze the market and the different solutions that you have and that you can access, again, through this spectrum, just so you know with whom you're talking to and what are the expectations of the stakeholder you're talking to, because sometimes we see some mismatch, which then creates some frustration, right? And I think that if the starting point is on understanding what's the intention of that investor, for example, what are specifically they're looking for, then I think the conversation becomes more fluid, probably.
Rita, thank you. I think that's the perfect introduction, actually. And we will get more in detail, maybe with stages, with funding opportunities, with finding what is right for you and not. We'll go back to that. In terms of policy making, maybe the only thing I would add, if you allow, is there are even countries that had in governance that did a step forward and already have this legal framework for social enterprises, for example, that allows you to position also yourself and have access to a legal framework that allows you to be more efficient in terms of how to implement your business model, etc. But for sure, we can speak about all of that as well. It is true that in Europe, and I was reading the other day a Reuters study that 1 out of 4 startups that is created is a social startup or aims to tackle a social problem. So this is huge. This number will increase for sure. many university programs with corporations, etc., have helped in raising a lot of awareness for this. And for sure, there are countries that are already doing a lot in terms of having the perfect ecosystem for a social entrepreneur to be able to implement their ideas and have support in different ways: investment, legal framework, opportunities, bringing enterprises and civic society together and having these bridges. So thank you for sharing that. So maybe I would ask you, in terms of the potential of what you've just said and the ecosystem that you described as well, in terms of the impact that has for startups and the opportunities that brings for startups. Startups that are related to our impact-driven startups and other startups that maybe are not, but how can they also benefit from this, and how can we make these sectors work together?
So I think that looking at impact from this economic opportunity mindset is just realizing that the market is changing. So we need to, as any entrepreneur, always needs to be attentive to the different trends. And when we look at consumers are demanding and are much more conscious and are demanding for sustainable solutions, for or businesses that are more inclusive socially. Like, just to give you some statistics, 55% of consumers are willing to pay more for a product that they know is, aligned with their values. And this just shows a great economic opportunity. So you need to serve your consumers, right? You need to understand what they're asking and adapt accordingly. Then in terms of the working force, like employees, we are right now going through a stage of development of society where people need purpose in their lives. I guess that especially in more developed countries, we have grown up more or less with a lot of good conditions, like social services, free education, access to health. Then, of course, this depends from context to context, but we grew up quite privileged as a society when compared to like 50 years ago. And then we see the great inequality that this world still has. And so we need to, we need to not give back. We need to do something more than giving back. Like, we just have this responsibility. And people are realizing that with their jobs, the intensive impacts on their communities in the world, in the management of resources, and so they want to contribute, making sure that their companies are creating a positive impact. And the employees are one of the main stakeholders of any company, and retaining employees is really hard. So again, you need to have your workforce motivated, and at the same time, if you are a good company, a good manager, you look at what your employees want to do and what motivates them to take advantage for your business. So again, understanding the trends and taking full advantage of them. And then finally, when we look at investment, so all the companies need investment at one stage or another, and then of course from different sources, but investors are also looking at impact, not because they are good intentions. A lot of investors are good intentions. That's the main factor for them to choose impact startups, or for them to be aware of these impact concerns. But the truth is, there are a lot of studies that show that impact startups, or companies that have impact in their values and that they actively seek for that, outperform the others. Impact, at the end of the day, is just a risk mitigation, right? Is understanding how can you do the best possible job with what you have. So this just makes perfect sense. And for us as managers, we want to maximize the resource, so it makes sense. And also, if for us to be able to attract capital at lower cost, this makes sense, then we have to look at this. So I would say that whether entrepreneurs are already calling themselves as impact entrepreneurs and actively taking advantage, or when I say taking advantage, is never in this greedy way, right? It's in an economic perspective. So if they are looking at social or environmental problems and trying to create solutions to solve them, but solutions which are financially scalable and sustainable, then great. For the others, I think that in one way or another, they will have to have at least some impact concerns. Impact does not need to be completely aligned with the solution they are developing. I mean, society still needs like softwares for what, I don't want to offend anyone, but like I was just trying to think of an example without a clear like impact strategically. For example, like a software, like a machine to build cars, and the software that is used or the hardware that is used does not, maybe it has, okay, I don't want to offend anyone, but let's just assume there's not a clear impact in it as a business. Still, the company needs to ensure that there's a sustainability across that business, right? So I think that these are the two differences. On the one hand, maybe entrepreneurs are really motivated to solve a social or environmental problem through their solution, and that's the opportunity. If other entrepreneurs are looking at other opportunities, which are very valid anyways, I think that they need, from this risk management perspective and also investment point of view and employee point of view, they need to at least embed some of these impact context and concepts along their the management of their business. So I don't think there's, like, we look at Volkswagen, right? What happened? I mean, they don't need to be an impact company, but they need, definitely, we all expect them to take care of the, you know, of the different stakeholders that they are dealing with. And they didn't do it in a way that we as a society perceive as positive, and then they got damaged. So I think that there are two types. Yes, impact entrepreneurs really focus on the social problems as opportunities. Go for it, amazing. We as Maze, we are looking for these. The other ones have a lot of space in the market. They are very, very valid businesses, but look at sustainability and impact components as something that you'll have to do, because it's not accepted not to take this into account anymore, I would say.
Yeah. Also, maybe as impact ventures or initiatives that are starting, etc., you can use other startups to partner with them, to co-create together, and to capitalize a little bit more, and use them to expand, and them yourself to make sure that their impact is aligned with that their vision has a positive impact, because we all have impact. It's a matter of being positive and making sure that we are tackling a social problem. Okay, so maybe let's discuss let's get a bit more granular and understand challenges social startups have, and we all know them very well, right? The stages, etc., and understand how we can go along in the conversation into partners, funding opportunities, and programs that can help you with specific challenges that you face or ambitions and expectations that you have. So we all know that a huge percentage, they say 80% to go again for numbers, but of startups, they don't succeed beyond what it is around a year and a half. When we go to social ventures, this number rises even more. What, according to all the experience you have also in your program, and the startups that you interview to join, the ones that you work with, the ones that you have been working with, what would you say that are the patterns here, the main challenges startups have? Is it really lack of preparation? What is, it's something beyond this. So how would you characterize this?
So I would say, I'll probably highlight the three main challenges that we see. So starting with product market fit, which everyone talks a lot about, and it's really true. So what happens is that many times we see entrepreneurs and teams that have invested so much, and of course, some financial resources, but also non-financial energy, their own money, their own time, all of that into developing this amazing solution that has not been tested whatsoever. And I think that there's some pressure on their side to have something that they can show that works, to other people. And there's this perspective that, if you want to go and talk to an investor, you need to already show something very exciting and then working without bugs and all of that. But the truth is that this is not the case. I mean, of course, ideally, yes, if you do the work that is required for you to get there. When you just have that and you didn't do the whole validation behind that, then that just doesn't mean anything, and it's a waste of resources most of the times, and again, a massive frustration for the teams. So I think that like the impact entrepreneurs and any kind of entrepreneurs, this is generalized, I would say, need to really make an effort into understanding the customer base, understanding if whatever they perceive as a problem and as a good solution are the effective issues at stake. And I think that the different stakeholders they deal with afterwards, like investors or other partners, like corporates or whatever is relevant to them, they will prefer to see numbers that show that, if you had a small MVP that is already validating different characteristics, this is much more valuable. So I would say that, the first one is product market fit, and specifically investing too much way too early. Have questions?
No,
for
this
me?
was me.
Sorry, that was you. Okay, I thought it was someone else.
Sorry.
Good. Okay.
Sorry
No.
if I interrupted you. Could you give an example maybe of the top mistakes you've seen? Exactly what I think what you've said was super, super key of investing way too much too early. What is the exact risk, openness to risk that I should have? Even things like choosing the right business model. When should I change? When should I keep going? Can you share a little bit? I'm going to mute someone. Sorry. Okay. Could you share maybe a little bit of your experience in this? How should entrepreneurs have like this temperature awareness of keep going, or I've already learned what I should learn from this. I have to revamp myself and change and maybe choose another path. We know a lot in choosing the right segments to work with, the right products, how to frame my product in terms of business model. So in terms of these challenges and the mistakes that you may do, do you have these typical cases that usually the startups do?
So I would say that so many times there are. So I think, and again, I think this is a personal perspective. Okay, so be careful with this comment of mine. So I see too many solutions without a clear business model. So really, how do you say, inspired by the Silicon Valley's models of Facebook's and so on, that have received tons of investment, and that eventually they'll understand what their business model is, and which is either based on advertising or something. So business models that are dependent on huge scales. And I think that this is this is viable to be done, but it's extremely hard. And when we look at statistics, we understand that the rates of success are below 1% on these kinds of models. So I think that this is extremely risky, and that entrepreneurs should, look and really analyze businesses that have failed. And many times we just look at those that have succeeded. And talking to first of all, obviously, understanding who your competition is extremely important. Talking to them is extremely important, and understanding who has tried and has failed is uber important. Like, we need to talk to these people because we need to avoid the mistakes that they've done. Most of the times we've realized that, especially in the impact scene, like It's about the mission most of the times, and hopefully the majority. So people are doing something for the mission. If they failed, they are quite happy to share their failures in order for someone else to try, you know. So I think that we need to build more on the failures. And unfortunately, we don't have this practice of sharing failures as much as successes. And many times successes in the entrepreneurial scene are inflated. Because they are, you know, we need to communicate something that is not quite there in order to get more exposure, more visibility, to get investment. So, and I think that sometimes this mindset of being too optimistic can be a risk. So, in terms of like business solutions without good business models, but again, they are possible. There's very low percentage of success, but I mean they are possible. But I think that sometimes the entrepreneurs are not aware of the actual scene. Other I don't know, other mistakes. For example, like last week we were at Web Summit and I was talking to a team that is a very recent team, so they're not even fully dedicated yet. They are just starting this project, but they are already developing this app, which is part of the solution. And then they came to me and they were asking me for my opinion. And it's basically a solution that connects charities with corporates, and it is a means for corporates to improve their CSR approach. All good with that. And then I was, you know, like I just saw them investing so much on that, and I was start asking them, like, because then there were a few assumptions they were making that were not aligned with my perspective of the market from knowing corporates and knowing CSR departments. And I was like, so have you spoken to corporates? Like, what's their approach? It's like, oh, not really. We're trying to develop this, and then we go and knock at their doors. And I'm like, what? No, stop it. Like, just go and talk to them first. Like, don't do that, because maybe it's completely different realities. It's so easy sometimes for us to think that we understand other people's problems, and we don't. So yeah, this is a concrete example. And no one told them this, you know. It's such an easy comment for me to say, like, don't just go and talk to them. They're like, thank you so much. This was so helpful. I'm like, you know,
entrepreneurs
for me it's obvious, but it's not obvious for most of the people. So yeah,
entrepreneurs tend to be very, very in love with their solution, and sometimes forget that their pains might not be the pains of maybe the thousands they would like to reach, etc. And how and also, as you said, I think that the challenge many times is understanding your scaling capacity and going on that direction. And don't lose your vision. If you see that you're already deviating a lot, that you are a bit lost, go back to the vision, understand if you're really going on that direction, stop, ask for guidance, and then go back to what you are doing.
Definitely. As an entrepreneur, you need to be quite humble. At the same time as like having the confidence, but you need to be very humble. And and it's hard, right? Because it's your baby, it's what you've studied, you know, it's more than anyone else, but still there are things that we don't quite know, but it's hard to understand where the line is crossed, right? I think we all face that. I mean, I face that in my job. Like, there are a lot of things maybe I think I know because I've studied, because I work, I have experience, but still there's a moment where I need to stop and ask and debate with other people, and where this line is not always very clear.
100%. And so how can, and making the bridge here, how can the right partners help us achieve that? How can either other stakeholders, different stakeholders and different types of partners in our business, how can they help us achieve that? And how do we know if this is the right partner, and how important is this?
Yes,
to be the right partner?
So before, just to finalize the challenges part, I talked about this product market fit, but I would also highlight the two others that we see, which is like the team's capacity for actually implementing, which it's still an issue. So sometimes the teams don't have the experience, the grit, the emotional baggage, the networking capacity to actually build and grow a company. So this is also something we see. And then there's, and I have, this is a third one, which It's not necessarily my opinion, but it's something that I hear a lot in the sector, more from investors' point of view, but I will share it anyways, which is this capacity to raise capital. So there are few people in the ecosystem that really believes that you as an entrepreneur, you need to be able to attract capital, and there's particular skills for that. Yeah, it's not necessarily my opinion, but this is something that, yeah, that is also quite viewed on this, but it's probably linked with the team's setting, I would say. But so okay, in terms of of the right partners, I think that so the right partners, there's, especially when we're talking about the impact context, the impact market, values are very important, and also the definition of impact. It's really hard to have a definition of impact. So impact means something for me, may mean something slightly different for Alexandra, for Samuel, for Andrea. So and when I say this, I mean, like, what do we consider as an impact venture and how impactful that is? I think that we just, and we do this exercise a lot at Maze, because there's no consensus at Maze. We can never really like all agree that one venture is actually like impact or not. So there's again the spectrum. Also in the, before I was talking about the spectrum more on the business model, but also on impact as well. And I think that does not invalidate the concept. I think we just need to learn to live in ambiguity and the lack of specific barriers, which I'm learning to deal with, and I'm getting there actually. But because this unclarity exists in terms of what's impact, when we're choosing the right, well, when you're choosing partners to work with, it is quite important to at least align values and align expectations beforehand. Because if we don't talk the things that matter, which are what moves us, why we do things, how we do things, if we don't try to anticipate the hard moments that will, the hard decisions we'll have to take as entrepreneurs or as professionals at any time, at like some, there will be several moments where we will have to make professional decisions that will be very hard, and that will probably will make us, you know, deal with our values and a lot of different factors. And we need to kind of discuss them with these partners. We need to understand, okay, when this moment arrives, where does my partner, where does he go for? He, she, what do they decide? And the same for us. And it's very hard to anticipate 100 with 100% confidence level, right? I don't even know how I will behave in a few years in whatever scenarios, but at least like having these conversations and understand what's important for the other partner. Because I think that many times is this lack of openness and transparency and dialogue in the beginning of the different relationships that actually then end up by creating some breaches, which could have been prevented with more dialogue. So I would say that. Then I think that what we see, so we provide acceleration programs, we provide investment, and we get a lot of startups coming to talk to us. And what we see sometimes is from some startups or some teams is a little bit an approach which is like, we need help, you know, just help us somehow. And they don't try to understand they don't try to convince us or show us exactly on how they need help. How can we help them? Why are we the best? Why are they knocking on our door? Like, what do we have that can actually add value? Because we cannot add value to everyone. And I say it a lot, like in our acceleration program, it's European based. I have sometimes like Indian, to give you a specific example, Indian entrepreneurs that want to scale it. So they are based in India, they want to scale in India. Like, I cannot really help them right now with the resources that I have. I have no knowledge, me or my team, right? We have no knowledge on the Indian ecosystem. We have no relationships there. Like, what is the added value, right? So you need to understand that. And And so that's the homework that you need to do. So first of all, understand what do I want as entrepreneur and as a manager of a team and of a business? What do I want to achieve? And then looking at the market, okay, who has what it takes to help me, right? And not so much, going and looking for some stamps on different programs of acceleration or programs of contests, all of that. We need more focus. I see sometimes a little bit dispersion, which is, it's justifiable, and I understand where it comes from, because it's really hard to be an entrepreneur, and I totally understand. But this exercise of trying to focus is important, and also for the other stakeholder who is in the conversation, I need to understand how I can help. So I think, I would say that these are the two main factors or things I would say are important to choose the right partners. One, dialogue on different values and understanding where people lay and what's important for them on the different variables that are going to impact our business. And the second, really understanding if the other stakeholder can help us and how, and discuss that in concrete terms, because this is a dual relationship. Like, we as accelerators, like, we are not just here to offer, right? Like, the success of the startups is our success. So I really care that the startups we work with are great. Like, that impacts us as well. Like, it's completely intertwined. So we all depend on each other. So it's very important that this connects, and this connection is good for both sides. Yeah.
For sure, and it's a good. Carlos has a question, but I think I'll add it after we start. Maybe picking on that readiness exactly. So we know that, and about funding in concrete, or about understanding your stage, etc. Early stage startups struggle probably the most, which is always a very, very hard road. We all know this. We are entrepreneurs ourselves, so we know this as well. The impact funding market is estimated to be $502 billion, so a very, very fast-growing field in finance. And as you were saying before, probably one of the most vibrant and interesting at the moment. About kickstarting your project, and maybe when you're already trying to accelerate growth and funding the next stage of your project, what are exactly investors looking for? And what do you think that, how can we measure this readiness momentum?
Yes, it's.
So I know it's a tough one, because it is
because again, it's, I started by talking about the spectrum, and that's, in terms of business model and different financial returns versus impact returns expectations across the spectrum. But then there's so many other spectrums that have to be taken into consideration. But trying to answer that in general terms. So I would say that what investors value the most is, we've kind of like covered it already, which is, on the one hand, show us that there's the real problem, that there is a real problem that you're trying to solve, and that your solution is going to solve it. So show us numbers. Ideally, yes, with the product developed, but more than anything, show us that that's the solution. And if you're going for for investors that are also expecting a financial return, then ideally you need to have a business model. So also show that there is ability to pay, or willingness to pay for your service. This is quite important. So yeah, I'm talking about early stage businesses with some traction already. There are some investors that invest, like business angels mainly, that invest on great ideas and great teams. In the case of our funds, we are going to invest in two kinds. Like, when you look at the life cycle, we're both investing in early stage with some traction products developed, but also in PowerPoint slides, that's it, in great opportunities, because the teams behind the projects, they have either created great businesses, and because they have shown that the opportunity is there. And so we're investing in that and really taking the risk. So in our case, for example, we're talking about these two. But regardless of where you are in terms of these two, or even ahead, the team, as you all know, is the most important. So a complementary team, more and more investors value that there's a tech team internally and that you don't outsource. I know it's not always possible, but try to have it as a priority if you can. We have seen so many cases of, sad, not sad in the destructive sense, but like annoying sense of a lot of mistakes being done and money being invested, energy, because of outsourcing partnerships that haven't, worked. So I think that if you can, tech teams should be part of the core team right in the beginning, and investors really value that. You take control, because tech, depending again on the different businesses, is the product, right? So you need to have that internal. But yeah, but I would say that the team, capacity to execute, experience, the networking, being humble. We really look at the more soft skills. I'm like, do I like this person? Because once you invest in someone, you have a long relationship with that group of people. So you sign a long relationship. So you need to get along well. It's a matter of values. How will this person deal when pressure comes in? Will this person be able to drop out and be conscious that perhaps does not have the skills to run a company which is 1,000 times bigger than this one? Like all of these things, these are soft skills that are extremely hard to filter for, but these are the things that investors look for and that entrepreneurs should look for in investors. That's why these networking moments like dinners, all of that, these are so important, because it's the in-person relation that actually happens once you get investment.
I was hearing you and complementing with the things that you said before, picking up from those questions before, knowing your market, knowing your clients, really showcasing that you've done your homework. You know why the solution works, and you know why you want the money and what you'll do with it and what it will mean for your business. This is something that we also come across maybe in an earlier stage, but people want investment. They ask us for investment. We don't do investments right now, but people ask about it. And when we ask, so what would you do with the investment? What are you looking for funding? And it's very commonplace that they don't know yet how it will help. They know that it will help scale up their business, but they don't know how. So be ready. Bridge for Billions went on a road for raising investment as well. So we talked with dozens and hundreds of people. So this is also a learning curve, for sure, aligning and being able to focus. So Carlos shared, and maybe I think this is also important for what you've just shared as well, that of course also impact is a huge umbrella term, as you were saying before. It can go in so many ways, and everyone has an impact. If you are a very social driven impact venture, how can you actually, what are the best tools, or should you outsource or not, on systemizing and gathering this impact, serving this impact?
Sorry, again, so, if you are what? Sorry?
If you are an impact venture, so I will read his question, but I think it's aligned with knowing how to share your impact and how to gather it and how to manage it. So he says, do you know if there's any tool, platform, company to measure the impact of our businesses from the entrepreneur management point of view?
Yes, it's a good question, of course. So we use the impact management project that I really recommend you to look into. It's basically a framework, quite simple, that helps us systematize the narrative for impact. And with explaining the what, the how, that what am I trying to do, to solve, how, in what scale, how much am I trying to go, and imagine I'm working with a group of people. Am I trying to scale deep and really working on all the different levels that this group of people need? Or am I scaling up because I'm just touching on a few things and then assuming others will complement my work? Then contribution, what's the level of contribution of my company? And then finally, which I find it very interesting, and it's something that I never had come across with before, which is risk assessment for impact. What are the different impact risks that I'm facing? And this was so eye-opening for me, because we do a lot of, in my head, I'm always thinking about risk management for everything we do. But I just, for some reason, I never thought about it like consciously from an impact point of view. What are the different impact risks? What if the users will not use it? What if we go bankrupt? What's the negative impact that this will create, the dependency level? Like a lot of other things. And just to give you an anecdote, like an example of what sometimes I like to think of to challenge myself, is when we think about plastic, right? When plastic was created a long time ago, it was an amazing, if we think about it, it was an amazing, impactful solution, right? It improved the quality of life of all of us. It provided access to services and products to people that didn't have it otherwise. It increased the health and well-being of all of us once again. It was amazing, but we just couldn't, I think that we as a society never really thought about the impact risk that was at stake, which is like, okay, what happens to plastic afterward? Like, how do you close the cycle? And today it's a huge problem. And it went from being an amazing solution, an impactful solution, into becoming into being one of the massive and biggest problems that we're facing right now. So, and I think that an impact entrepreneur should be also thinking about their risks, not in a crazy maniac way to also get depressed and stop doing what they do, but just as a mitigation. I think it's important. And also because that gives some reassurance to the person we're talking to, being in control. But so this is in very light terms, this is the impact management projects framework that then I can share with Alexandra, and Alexandra can share with you. And there's an expert which is part of this group. She's called Amanda Feldman, and she's the person that really helps us. And we have had workshops with her internally as Maze to apply it and learn it further, but also with our entrepreneurs. So I really recommend, Alexandra, if you want to invite Amanda for a fire chat, she's great. But so, yeah. So basically, I was talking about this framework because you asked me about frameworks, but also because this helps us justify why this is impact to us. Again, before I was saying that impact for me is different from impact to Carlos, for example. And so this just helps you systematize your rationale today. Why is this impact for you? Why are you as an investor investing in this? Why are you as an entrepreneur believing this has impact? Then circumstances may change, but at least that was your rationale. And you protect yourself. This tool will also help you, of course, choose the KPIs that are relevant and align with your solution. And there are a lot of impact measurement tools out there in the market. Many of them quite complex in terms of the different assessments that you should do. We believe as Maze, we try to be very, we try to focus on one or two key indicators that really are the core of what you're trying to do, more than trying to measure everything else, because otherwise it's too overwhelming. And then it's also the risk is that it's based on a lot of assumptions that we cannot control. So we might as well just be objective, okay? And then just track that and then evaluate if that KPI keeps on being relevant. But for example, in the case of our funds, we as fund managers will be monitored, our performance will be monitored and evaluated based on the financial KPIs that we are able to show, but also on the impact KPIs. And the impact KPIs are going to be done like this. So for every investment we'll make, we'll have the impact management projects framework to explain why that's impact for us, the whole rationale behind it. And then we'll decide on a 1, 2, 3 max KPIs that are going to be monitored throughout time. Did it answer? To your question, Carlos, do you have any further question on that?
Feel free to unmute yourselves and reply. Okay, I guess so. It's okay. Yeah, okay.
Okay.
Perfect. Thank you, Carlos. I don't know if you, Carlos, or anyone else would have a question. I don't see anything in the chat, but feel free to share it. And while you think about it, I'll maybe ask Rita to be very mindful, as I was saying before, about everyone's time and not take too much as well. Oh, Samuel wants to make a question. This is the right moment. Samuel? Samuel? I don't know how to pronounce your name, sorry. Go ahead.
No, it's correct. Okay. Let me type it.
You can ask it. If you can use your microphone, feel free to just say it out loud.
Okay. What advice do you give to a one-man business? A one-man business, like someone who developed the product himself from scratch, then with nobody, is now looking for funding the project. Do you understand?
So you're a solo founder.
Yes.
As a solo founder.
I didn't understand the question.
Okay.
Sorry.
What advice do you give to a single founder who is looking for an investment?
Okay, good. So I would advise you to, are you a single founder with a team or without a team?
Without a team, no team members.
Okay, find a team, because you need a team. You either need a co-founder or you need a very good team behind you. But ideally, so investors and accelerators and those looking for startups, we really look into, again, this risk mitigation, obviously, and for indicators that allows us to kind of predict chances of success. And a single founder with no resources around is not in a great position to build a scalable business. And as investors, we want to understand what's the context, that we're investing in. So of course, the one founder, it's an extremely important person, but we need to understand it's sooner or later, this person will have to have a team, and we need to understand it now if we believe in their team or not. And the level of work you'll have and the level of responsibilities you'll have, ideally, you'll share it with someone else. And also, a solo founder has limited knowledge and experience in one area. So you can have a lot of experience and knowledge, but if you have a co-founder that complements your experience and your knowledge into another area that is important for a business, perfect. So investors really look for that. I would really urge you to get someone else on board. And especially if you are still in the beginning and you're still looking for funding, it may be harder for you to get a team, like a paid team, but at least get someone else to help you build the company as a co-founder. And yeah, I would say so. Yeah.
And also, Samuel, maybe the moment for funding for this kind of investment, an external investment, may be later. Are you now maybe what you need to do is to attract other experts in other way, really maybe work on your business model. I mean, I'm just extrapolating here, but maybe there are other profiles of funding that you can look for, like community-based funding, like bootstrapping. Of course, it's an option we all know very well, but other funding opportunities, grants, from, I don't know, competitions, programs that will allow you to get ready to then, when you have a team and once you know exactly what to ask for investors and attract their interest, then you'll be ready to maybe look for this external funding. And I'm using a general
That's concept. Obviously a great point. Yeah.
But it is true that solo founders do struggle with, it's not a rule, but of course, for the reasons Rita said, struggle for this accountability with investors.
Okay, but
yes.
Okay, but if I'm just only two in my team, like I just get one more person to join me, is that okay enough?
Of course.
Okay, thank you.
Mhm. Do you want to share another question?
No.
Okay.
No fun.
Okay. Okay. I don't know if anyone else would like to share a question. Maybe I'll just ask Rita before you let me know. Okay, no, there's not. Let me just. Okay, Rafa is saying that he will get in contact with you. I'm very happy to hear that as well. Thank you, Rafa, for joining today.
I can write here my email.
Yes,
Maybe
and
you
I
can
will.
also share afterwards, but
I
I'll
will.
just write it here.
I will, and over in the community where you guys all seen the link to join and everything, I will share Rita's contact, Maze's website, which you can see here in the presentation as well. But so, and maybe to close, what about, so you have a program, an acceleration program, and we understand here the right stages. When is the right stage to join a program like Maze X as well? What kind of support do you give to startups that are already in the stage? Could you describe a little bit in terms of a concept of accelerating and having this support for you to grow? And I imagine that all of you probably went through an incubation or are going through an incubation right now, probably with the leap even. But so what is the next stage? When are we ready for this? And what kind of programs are out there and how can they help us?
Yes, of course. So in terms of MazeX, so MazeX is a European program. It's based in Lisbon. And we work with one cohort of 10 startups a year. So it's 3 months of acceleration, quite intensive here in Lisbon, starting in May, ending in end of July, where every startup receives a very customized type of support. So we have a strong team, quite hands-on and available to support the startups with backgrounds from consultancy, strategy, finance, service design, product management, tech, investment. So all of this, where we do a lot of support to the startup. So it's not, don't expect from AZEX, don't expect a program which is more curricular. So week 1 will have business model, week 2 will have impact. So in our case, we are really like meeting individually with each startup and understanding, okay, what are your priorities? What do you need? How can we add value in this sense? And then really add value adequately. But then, of course, there are a few throughout the weeks. There are a lot of initiatives, such as a few practical workshops where it's for everyone, networking events with the community and the startups, meetings with investors, with corporates, etc. So also expect some dynamics, but the majority of the bulk work is going to be very individualized because we believe this is what makes sense for the startups we work with. And to actually give you some visibility on that. What are the type of startups in terms of stage? Can you hear me well? Because now I see a message here that the connection, okay, good. Yeah. So in terms of the startups, we're talking about obviously impact startups with this lockstep model. So the business model aligned with the impact. And in terms of stage, we're talking about early stage, but with some traction. So in the case of MazeX, we look for startups that have the product developed and they can show us that they have some users, some revenues, all of that validates the concept. And from all over Europe. So yeah, these are the 3 months. And then after the 3 months, we have 6 months of ongoing support where we continue working with the startups. They can go back to their countries if they like, and we continue on that remotely basis. Or if they want to stay in Lisbon, we give them co-working space. Then for all the 10 startups, we give 7,500 euros equity free, just as a stipend, a support for them to move to Lisbon and to be able to live here during 3 months. We also have 3 corporate partners. It's a bank, BNP Paribas, the French bank, PLMJ, which is a law firm, a Portuguese law firm, and a private health group in Portugal. And these 3 corporate partners are opening the doors to test innovations internally. So they will choose, out of the 10, they will choose 1 startup to pilot with. And again, we'll do a lot of hands-on work into helping the pilot to happen. If you have specific questions about this, let me know now or let me know afterwards. I also really encourage you to obviously check our website, which is mazex.com, maze-x.com, where you'll see a lot of information. And feel free to reach out to the alumni, so the startups that we worked with in the first cohort, because they'll be able to give you a more concrete perspective on the program, or at least unbiased. I try not to be unbiased, obviously try to be very realistic, but at least you'll get the other side of the service kind of. And I think it can be quite useful for you. We will also have a Q&A session in the beginning of December about MazeX, where we'll answer all the questions that you may have and the most common ones. So if you're interested in the program, join us. It's just a matter of following our Facebook page just to know when the date will be, because we still haven't fixed the date. But feel free to reach out and to let me know if you have any questions. And obviously it's great to be here talking to all of you. And first of all, congratulations on all the work that you guys have been doing, because Alexandra has told me so much about Bridge for Billions and all the work that you guys do, and it's great to see that. And having these connections between the different programs is obviously great. So Sandra, I told about MazeX, but I didn't tell about the rest of the programs that exist out there.
Yes, for sure you can do that, Bridge. And for you guys that are incubating, when you finish the program, maybe it's the perfect time to, since you're finishing now, maybe try to understand if you're ready for an acceleration. Maybe Rita, I don't know, I don't want to take too much of the time as well. I would prefer for you to do it. Maybe if you can give this idea of when would you be ready for this kind of work. When is the best moment for you as a startup to know I'm ready for this, and what would be the advantages of a work like this?
So I think that, so you are ready, at least for MazeX, you are ready when you have a product that is, more or less developed and ready for scaling, because this is an accelerator really focused on scaling up. Not all the programs are. There are programs a little bit behind in terms of the development stage where you are, and so the resources and the support provided is according to that. But so you need to have a product, you need to have a team. Here, at least 2 founders or 1 founder with a team is extremely important for us, because we need to make sure that there's the capacity to actually grow. We need to understand that, so what we expect to see from the startups in terms of what they are looking for is they need to be ready to sell to commercial partners if their business model is B2B. They don't have to have interest in Portugal as a country, because we are European, we have very good networks all over, but we need to understand, okay, what's your strategy for growth? What do you care? What industries are interesting for you? What countries, what geographies? So you need to understand where you want to scale, okay? We need to understand that, again, so that we can assess if we are the right partner for you, not just the other way around. We need to, once we select the startups, we need to be confident, of course, that we can also add value to you. I would say it's this pretty much. And then obviously, if you need the customized support, if you need to reflect on your strategy, there are a few startups that have gone through a lot of different acceleration programs, and that perhaps they just need to focus a little bit, and just do some work and implement all the insights that they've gotten with all the different opportunities they got. But still, this doesn't mean that MazeX is not the right. But when we see that there has been a participation in a lot of programs in a row, then we also become a bit skeptical on how much more value can we add. If so many people have worked with them, why MazeX? So to clarify, I would say product developed and some traction that validates the model and that you're ready for scaling, and having some clarity on your growth vision as a company. What do you need? What are your next steps? And how we can help you? Is that through opening doors with corporates? Is that through raising investment? Is that through reflecting on the strategy and adapting the model? What do you need? And if you go on our website, you'll understand like the type of team that we have, and you'll understand the resources that will be available to you. So yeah, that's a kind of, was it clear?
I will let everyone share. I have a question, and after I will ask for questions if you will have, and if not, maybe we'll start closing. So I'll give you this minute, and while I make this question for you guys to think, I have a question from Sarita. She's based in London. She's not here today, but she sent me this question, and I think it's good to pick on what you're just saying. So she's a founder of an app, a startup that is based with an app technology. What would be the minimum proof of concept that she should present and within the business plan key points when she's applying for this kind of support?
So it's always very hard for us to say what's the minimum in terms of hard numbers, because it depends on from model to model. So I'll give you an example. Like there are a few startups that have revenues, and they actually have good numbers in terms of revenues. But then when you look at those revenues, let's say you had like 100K in revenues 1 year. That's pretty good, okay? Again, depending on the context, but let's just assume it's 100K. But then you try to understand where those revenues come from, and they come from consultancy work, which is not aligned with the solution they're trying to do. You know, it's just an extra, which the team can do, but kind of to survive financially. So that tells us zero about the validation of the model. You know, it's great that you managed to, to generate the 100K in consultancy, because that's really good for your bootstrapping approach and for your organic growth. But that doesn't tell me that there's ability to pay for your service and product, and that there's a product market fit. So there's not a minimum number of users. There's not any minimum number of revenues. It all depends on the model that you're creating, and also what you, in your capacity to tell us and convince us that that's good enough and that tells something. But yeah, I would say that if you have a model that is dependent on subscription, then of course you need to show us not just number of users of your service, but we need to understand the retention rate, right? Like what's the repetition of your users, because that's the basis of your model. So, try to understand what are the relevant metrics and just be clear about them. And if you have the honest belief in them to prove the model, then I guess we will also have, but it's really hard to say like what are the numbers. It's just a matter of like, if those numbers are aligned with the solution that you're trying to deploy.
Any questions? Okay, I assume that's a no. I can only say thank you, Rita. You've been super, super generous. I love the session. I hope we can do more things in the future together. I want to hear everyone's feedback to explore Maze's website, explore Maze X, explore the great things you're doing. They also have a super cool newsletter if you want to subscribe. I will share the contact and the recording of the session online if you didn't hear anything and you want to go back to it. From today's session, what I would take is that impact ecosystem is so particular, that also has this amazing thing that we all help each other and we're all willing to learn from each other. So do share, be out there, question your clients, question your circle, your stakeholders, your partners, understand how they can make your product and your work so much better. And thank you for being here so attentively for this hour and a half almost. And do share if you have any feedback or any specific questions that you want me to put you in contact with Rita as well. Thank you, Rita. Really, really amazing.
Thank you. I hope it was useful somehow.
I hope you all enjoyed. I will see you around the community. If you have any other comments, feel free to share it. Okay, thank you, and have a nice rest of the day wherever you are logging in from in the world. Thank you.
Bye bye.
All right. Thank you. Bye.
Bye.
Thank you.